Okay, so hello, future Avery, welcome. Um, we're going over action today for October 9th, 2024. Like I said yesterday when I was doing my practice video myself, we had this fair value gap down here, buy side imbalance, sell side inefficiency, but we also have this sell side right here. To be honest, I was still more bullish, like I wrote. Bias for the week is bearish until it hits the weekly sell side, which was over here. And it basically filled on this inefficiency or this volume imbalance, which I was looking for. But if it closed above these relatively equal highs that I had written out right here and actually like just closed above in general these, I was gonna basically, if it showed a willingness to break high above this last week candle right here, then I was like, okay, I'm gonna be bullish. So obviously it broke above these highs. This morning I saw it was bullish going into the day quickly. The day, let me just remove drawings quickly. Day right here, opened up, dropped down, hits this sell side candle, sell side red candle, and then basically breaks through these highs, hits the consequent encroachment, which actually I had as one of my targets. Consequent encroachment of the weekly. I had used it for the weekly. It broke through that. Low key think it could break higher into these imbalances tomorrow, so I'm gonna stay bullish. Obviously is not. Tomorrow we do have some big news. We have at 8:30 core CPI. ICT said stay out of CPI, PPI, FOMC, non-farm payroll. So I'm gonna stay out in the morning, maybe work in the afternoon instead. I'll probably still check it, maybe like 9:30, an hour after market opens up, around silver bullet time. If not, 2 p.m. is always there. Going into the 15-minute quickly. Okay. Remove drawings quickly. I'm gonna remove, that was the other day. This is today. 7 o'clock right here. Actually, I didn't have a lot. Okay. So, yesterday we hit our targets. 7 o'clock is when the New York session starts. I had initial buy, initial sell, breaks down lower, kind of fills in this buy side program that I was hitting to the 50% mark, I believe is what it was. Yeah, it does hit it down, come up, comes back down. Let me remove this because that's not important. Hits 50%, the halfway mark, sells it. I low-key perfect. Take sell side liquidity. Took buy side liquidity. I was expecting it to sell off, so I actually took a trade, I think, in the morning. Let me see the NQ, just normal NQ. Yeah. So 7 a.m. I entered in. We could view it later, but We'll just go with the continuous chart because that's where I take my trade sometimes. And so, yep, 9:30, I hit that 9:30. Market takes this sell side and then displaces higher. Like I mentioned, 50%. Respects to 75%. Shoots higher. And so if you're tracking from the order block to the first price move, 50%. This is a change of this is order block because it's a change of market structure. Breaks it, market structure shift right here. Breaks above it. So you can take this, like, that's why I had it written out, because it was a target. Once it breaks it, I had a next target of yesterday's 3 p.m. Keeps on going. And then ultimately, I had written out these 15 minutes. I kind of just lumped it all together, you know. This high right here, this was all sell-sided or buy-side inefficient. So, yep, hits this target, breaks down, fills a 15-minute sell-side imbalance at 10:45. Sells up or buys up. Creates another buy-side imbalance, which it does fill. So external liquidity. Once it breaks up past this external liquidity, comes back down, fills up internal, always going up to down. The reason why I don't think it went lower is because it took internal liquidity first, is the way I was explained to me. If the market takes internal liquidity, it won't take external liquidity. So this sell side right here is external liquidity on this bottom right here that it finally took. When it takes it, that's the external liquidity. It didn't take no internal liquidity. So, like, for example, this fair value gap, internal liquidity, takes external, comes back into internal liquidity to reach up for the next higher leg. And so that's why it didn't come down here, because it just took the liquidity normally. So, yes. I'm going to come down into the 5-minute. I took some notes for myself in the morning when I took the trade. As you can see, I took sell and I bought at the low, 20-point move. This is all demo, by the way. A little bit more than 20 because I was aiming for just below. I guess I was aiming for this internal liquidity right here, but yes. So once it saw it retrace, I was like, okay. It was a pretty easy move for me, personally, to see it happen. Like I said, takes buy side. Market comes down, creates initial sell side, takes a sell side, but I guess to myself, notice how, like, kind of takes these internal liquidity pools, the fair value gaps, and how unless the market breaks through strongly, it's not gonna it won't continue through. So like it was breaking through these lows, yeah, but without I could take this retracement like this right here, and I believe that's a I believe that's a OTE too. Optimal trade entry. I mean, I'm doing it right here because this is the order block that I took on the 5 minute. If you want to do an order block, I believe like this is the high that it broke off through, and then this is the swing high it made. When it returns down, it's gonna be going up further. Overall target it made was right here. Honestly, either way, like my target would have been right there. Wait for it to retrace back off of this high that it made. You enter in. It was higher, and then it kind of hits like around 10 a.m. Silver bullet, breaks up down somewhere in here. I'm pretty sure there is a fair value gap that we could have taken. Afternoon, it kind of makes this high. After it breaks through this external liquidity, it slowly retraces back. This is where, in my opinion, I would start shorting, turtle souping. It took this note. Rate of liquidity typically looks like longer wicks. Not much displacement with a fair value gap created to that side. Signs of a reversal, question mark to myself. Hit my target high with high resistance because it was these will make more sense on the 1 minute chart, but if you could see, like, it wasn't really giving me any entrance into it after that. So even though it did return back, the only fair value gap was this tiny one right here. It didn't give me any, like, this price leg up in a way, and this price leg up in a way. Let's quickly go into the 1 minute because I think that this will make more sense on like why I wrote these notes. So like I said, I had sell side right here written out. This was my target, like my sell side liquidity. My buy side liquidity. So like I said, I saw price break above this high, and it didn't break above it with a lot of force at 9 a.m. So when 9:30 hit, I saw this move down, breaks this, broke the high, broke this low, right? So I was like, okay, breaks this high, doesn't show a lot of movement, doesn't create a fair value gap to enter in through, breaks down lower, creates this fair value gap right here. I didn't take it because I was still looking at this one, possibly as an inversion, which actually it does provide an inversion fair value gap. But I was a little nervous and half asleep working too. So when it creates this one, I'm like, okay, my target's right here. Creates this sell side, pushes back up, and then creates this, so I take the sell. My entry was right there with this fair value gap. It's also the first presented fair value gap, which is why I took that entry. First presented fair value gap. The new day opening gap was very weak. So when it made it, it kind of took this again as my chance to aim for this sell side liquidity. Like I said, 20-point move. I was done for the day. Didn't take no more trades, but I did watch. And then I saw it reverse all the way back up here. I was actually grateful I got out so quickly. So I'll be honest, I'd say I'm lucky. Though I will say I'm proud of myself for using the first presented fair value gap and not taking any more trades throughout the rest of the day. Because I didn't want to ruin my P&L. So yeah, 455. And so this is what I mean by sell side liquidity rated. Wicks are not really like, there's wicks. This creates more sell side liquidity rated. Bodies do close below it, but it didn't have displacement like you see with this fair value gap. It broke below this low with this fair value gap. That's a big thing that I think I'm just noticing right now. And so off the first presented fair value gap, honestly, gives you this a couple times, but best to probably wait until time in price. So time 10 a.m. What happens? Okay, it shows its price leg finally start to move up. Finally starts going. Actually, this is an order block. Right, breaks up above this high too, this short-term high, breaks above it, comes back down into this right here order block again. Also creates an inversion fair value gap, right, which you could have taken at 9:10 a.m. Like I mentioned, 10 a.m. silver bullet. Yep. And it just breaks above this high. And this is where I was kind of nervous though, because like I wrote down here, doesn't show that it wants to break above. And so this is where I was watching price a little bit more closely, because well, first let me come down here. It didn't take this fair value gap. For one, I was bullish in the morning. And so, to be honest, I don't know why I took this sell. So, like I said, got lucky. Second, it took internal liquidity first. It was taking internal liquidity by trading up into it and kind of wicking far. So it didn't have enough orders to go to the sell side, is what I'm thinking. I don't know. This is still early to me. I'm confused a bit by like where does price want to run to? And price ran in here, and so I didn't think it had enough force to go down lower and break this low. And so when I was watching price, I saw it slowly come up and break this a high, close above it. And it was kind of just going up slowly. So like, that's why I'm saying like it hit my target, but with a lot of like resistance. Like this was my target right here, and this slow moves was very like disheartening for me. I was nervous. But then price comes down, hits this order block 50%, I guess. Let me go up to the 5 minute quickly. Yeah. Let's go back to it quickly. Go slowly. And then it finally like kind of breaks above. Slowly comes back down. Once it hits this, then it creates this vacuum block. Breakaway gap, vacuum block. These huge shifts create another order block, which you could use as an entry because it does close above. Validates it as an order block. Creates these vacuum gaps. So I'm like, okay. Breakaway gap, vacuum. When it comes down, you'll want to enter in. And it reaches your high. Right here. So this is where I'm a bit confused still, because it breaks it above. I guess external liquidity, this is all internal right here now because we're in the range. That's now the range. And so it comes down, takes internal liquidity to external. My target goes over here. Keeps on, created this fair value gap. There's multiple fair value gaps, but this one's the like only one that traded back into. And I didn't take it because I was like, I don't chase price. From here to this order block, I wanted to be in a discount. This down here was a discount. If it traded back down into here, it was a discount. Even if I like pulled it down a little bit more, see, like I wanted a discount. This wasn't a discount. I mean, if you take hindsight, this full range, now finally it's a discount. But I'm not gonna know that this was like my low hanging fruit. So yeah. Internal liquidity taken, keeps on going higher. Finally creates a fair value gap again. Broken through. Where can it go through? Down here. Takes it though. Breakaway gaps. Thought about taking this when I saw it, but it was a lunch macro already. Where to? I was actually gonna aim for this high, so 97, 07, 17. 17 is like 20 handles is my low-hanging fruit. Ultimately, I wanted to hit this right here, which it did eventually go into this, but I would have been in drawdown for a bit, and I would have probably gotten stopped out because my stop was below this candle. Anyways, the lowest, like I said, ICT usually says is like this bottom of the first candle, or the third, so like I was not willing to take that risk. I would have gotten stopped out, so I'm glad I stopped on that. Good job, me. Shoots down again. Where does it go? You still have these imbalances down here. Actually, that's the proper way to draw the fair value gap. Still, you have these down here. And so basically just look at the price. Like, I'm gonna watch this video a couple times over. But look at how price liquidity at a point, this becomes, when it starts retracing, this is the new low. Right, reverses. Okay, where can it go? I'm aiming down here, and down here. And so it drops below with force. Where's it gonna go? Well, it takes internal liquidity first before going for external. Finally comes back up. Now where's it gonna go? This target. Barely takes out. People are gonna have their stops right here. Support. Takes liquidity. Boom, starts taking the run. $2 p.m. Take sell side liquidity right here. 1:30 to 2 p.m. Start looking for my silver bullet here. I would have missed the PM. No. This whole move. Well, 50%. I'll just take it right here. Nah, I would have gotten stopped out. Too hard for me to perfectly. I would have gotten stopped out. Nonetheless, external liquidity, lower new lows. I have this range, internal liquidity right here. Takes internal liquidity, starts breaking these highs, breaks through the highs with force, creates this fair value gap, and these comes down, internal liquidity, external liquidity. External liquidity can't keep on going up, doesn't have enough to take, so it needs to take internal. Taken one sweep. Okay, that makes a lot more sense. Okay, that does make more sense. Boom, highs. Can't go higher no more. So it's going to take internal liquidity. A high, low. $7 a.m. high. Boom. Can't take no more external liquidity. Finally reaches its peak. External liquidity taken to run up high. How far was it taken? A little bit, so it can't go super high. Reverses. Took internal, external. People that bought down here, a lot of stops right here. Boom. Goes up. Overall, good day. I'm proud of myself for stopping on that one trade. Not a lot of people would stop after one trade. I stopped because I was like, I was thinking FOMC minutes was the same as FOMC interest rates and stuff, but it's not. Either way, good to stop. Nice job stopping. Good job, self-control. Good job seeing this. I mean, first presented fair value gap, right? That's what I was watching. I was bullish though. So, surprisingly, stay a little bit more on your bias. It says I'm bullish. Had a small range though. That's why I was kind of against it. I was bearish because I had this new week opening gap right below. So market started moving down, so why wouldn't I be bullish? Right? But it's alright. I mean bearish, but it's alright. I still profited somehow. Pure luck, but start practicing more.